So in this video, I'm going to explain about the recognition of PPE under AASB number 116 or IAS International Accounting Standard number 16, whereby para 67 identifies two occasions where the recognition should occur. Number one, on disposal of PPE, whereby you dispose your assets, to sell your assets. Okay. Number two, when no future economic benefit are expected, you cannot use that asset anymore. Does not give you any benefits. It does not give you any added value. Yeah. So in that case, we should de-recognize this asset. We need to take it out from our balance sheet. So on sale of item of PPE, we must account for depreciation from the beginning of the period until the date of sales. Okay, until the date of sales. So you need to calculate depreciation from the beginning until the date of sales. Okay, and account for sale and recognize gain and losses. So you need to calculate, this is your cost, for example, 100,000. Then you determine your accumulated depreciation, maybe 90,000. So this is your carrying amount of 10,000. So when you dispose your asset, what is the value? What is the disposal price? What is the, for example, you sold it at price of maybe 15,000. So certainly you know that you are making gain of 5,000. So this is your gains on disposal. Gain on disposal. So first, you need to calculate the cost, determine your accumulated depreciation, and then we're going to account the sales, and from there we're going to recognize this 50,000. You're going to close this account cost, and you're going to close this account also 90,000. So it becomes zero, yeah, it becomes zero, and then you're going to record these items. Okay. Let me show you the procedures later, yeah. In this example, for example, an entity acquired an item of plant on 1st July 2020 for 100,000. So this is the cost, 100,000. Had a useful life of 10 years. Residual value is 20,000. So the depreciable amount is only 80,000. It's only 80,000. And you're going to divide it for 10 years. So every year depreciation should be 8,000. On 1st January 2023, the entity sold the asset for 81,000. So this is 1st January 2023. So you sold the asset for 81,000. So you need to calculate how much depreciation from the date of purchase until the date of disposal. So you need to calculate the depreciation for this first. So prepare the entity's journal entry relating to assets in year of sale. So how are you going to do that? Number one, you need to determine the depreciations. Okay. At the point of sale, depreciation of asset must be calculated as the part of the year for which asset was held before sales. Yeah. If you look here, you purchase the asset on 1st July 2020. So 1 year will be 30th June 2021. All right. Okay. Second, this is 1 year. And then 1st July 2021 until 30th June 2022. This is another 1 year. And then from 1st July 2022 to 31st December 2022. This is half year. Okay. So you need to calculate depreciation until the date of purchase. So how much? If I can say here, this is 80,000. If you divide by 10 years, so every year your depreciation is 8,000. 8,000, 8,000, 8, oh, this one is not 8,000. This will be 4,000, 4,000. So let us go to this example. So says that at the point of sale, the depreciation on asset must be calculated for the part of the year for which the asset was held before sales. So for the last year, for the year of sale, we should provide half year depreciation, that is 4,000. So this is the first step. Record the depreciation first, debit depreciation expense, credit accumulated depreciation by 4,000, 4,000. Debit depreciation expense, credit accumulated depreciation 4,000 and 4,000. So your total accumulated depreciation now is 20,000. This is your accumulated depreciation. You have 8,000 before this, year one, 8,000. Now you have another 4,000. So total is 20,000. The second part is you need to determine your gain on disposal. Your gain on disposal, and then you're going to close all your plan as well as your accumulated depreciation account. So how to close your plan account? Very simple. Your plan before this is debit 100,000. To close your plan account, you need to credit 100,000. So this is 100,000 credit. Okay. And then accumulated depreciation is credit. So to close this account, we have to debit the account. So this is the accounts. Okay. Debit account. And how much did we receive from these transactions? We said that we sold the asset for 81,000. Okay. The cost is 100,000. The accumulated depreciation is 20,000. So our carrying amount is 80,000. But you managed to sell this asset and get cash of 81,000. So 1,000 will be your gain. Am I right? 1,000 will be gain on disposal. So record the cash, 81,000. And the different 1,000 is your gain. Let me just repeat again. The asset value based on our valuation is 80,000. You managed to sell the asset. You managed to dispose the asset at price of 81,000. So you're making a gain on disposal, that is 1,000. Gain on disposal, 1,000. So this is the second part of this derecognition procedure. Okay, is it okay? Yeah. Okay, let us move to another example. Okay. In the above scenario, the asset was sold for 81,000. Now we refer it as to Plan A was instead traded for another Plan B, with Plan B having a fair value of 280,000. So the entity make payment of cash of 202,000. So the trade-in value is 78,000. We don't get the cash, but we buy a new asset with fair value of 280,000. Okay. And then we make payment. This is the value of the new plan. This is the new one. 200, but we only paid 202. So meaning to say, the value of the trade-in plan is 72,000. If you go back to our example, our carry amount is 80,000. But when we trade in the asset, we only get 72,000, yeah, as the trade-in price. So we suffer a loss here, yeah, of 8,000. Is it 8,000? Yes, 8,000. 8,000. 8,000 here. Okay. So how are we going to deal with this? Okay, is it 8,000? 208. Okay. Oh no, sorry, not 8,000. 280 minus 202. This is 78. This is 78,000. So our loss is only 2,000. 2,000. Yeah, our loss is only 2,000. Okay. Plan B has a fair value of 280. We make a cash payment of 202. So the carrying amount is 78,000. Sorry, the carrying amount, so the trade-in purchase value is 78,000. Our carrying amount is 80,000. So our loss is 2,000. So how are we going to record this? Number one, we're going to record as usual, we're going to close our accumulated depreciation. So accumulated depreciation, I'm going to debit here 20,000. I'm going to credit loss 2,000, and I'm going to charge that account to my plan A 22,000. So if I have here my plan A previously is 100, now I'm charging here 22,000. So the value will be 78,000. And then the next phase is I'm going to close this plan A. I'm going to credit another 78. So I'm going to credit my plan A by 78,000. Okay, record the cash payment credit 202,000, and this will be the new value for your plan. That is 280. This is your plan B 280,000. Okay, are you okay with this? Yeah. So this is the procedure when we record our derecognition of assets. Maybe if you dispose by cash or you trade into other assets. Okay. And the final part will be about disclosure. How we're going to disclose all this measurement in our financial statement. According to para 73, AASB116 or IAS number 16, it says that we must disclose what measurement we use. What measurement we use. Are you using the cost model or revaluation model? Okay. Are you using the fair value or what? And what are the depreciation methods? Are you using the straight line method, reducing balance or diminishing method? And what is your useful life of or the rate of depreciation when you calculate depreciation? So this is very critical information. Okay. If revaluation model is used, then according to the para 77, you must clearly state the effective date of revaluations. Who performed the revaluations? Whether it's performed by independent valuer, yeah. The methods. What are the methods to come up with the fair value, the new value? And for each value class of PPE, the carrying amount that would have been recognized if the cost model have been applied. So you need to inform the user of the statement. If you don't do the revaluation, what will be the carrying amount? What will be the carrying amount? Apart from that, you must also disclose any revaluation surplus for the period, indicating the change for the period and any restriction on distribution of the balance to the shareholders. There is any changes in asset revaluation surplus must also be recorded. Okay. Okay, overall, I can say that PPE asset can only be recognized if it meets criteria. We have several criteria. There is number one is the economic benefit. Number two, you can measure the cost reliably. So PPE asset are initially measured at cost. There are three elements. Yeah, three elements. The cost of purchase. Yeah, cost directly attributable and dismantle or removal costs. Subsequent measurement, you can either use cost model or revaluation model. You need to provide depreciation either if you use either both model. Okay. And then about depreciation, you must know that depreciation subject to the residual value the useful life, and what is the pattern or the benefit. So you have to decide which model, which measurement, which technique to be used to calculate depreciation. And you have to apply revaluation model. If you choose to apply revaluation model, so you have to apply it to class of asset, not on selective asset. Okay. And then we also discussed about revaluation and reversal. What happened in reversal case? Yeah, the amount exceed fall below the original cost must be recognized in the profit and loss account. Okay. Finally, unless they follow prior revaluation increases, revaluation decreases are recognized in profit and loss in the period which they occur. So this is all about AASB 112 or AASB 116 or IAS 16.